Inflation. It's all you're hearing about.
Inflation.
This necessary evil keeps economies growing, but right now, it's out of control.
Peak inflation's here.
What, 6.3% inflation? I thought it was something like 8%.
And food prices are not coming down either.
A recent electronic search across news articles and broadcasts around the world discovered that the term inflation came up more times than any other, at 900,000 hits. To give you some context, the word sex only appeared 600,000 times, and most of them were me. Inflation hurts everyone, from savers to investors, company owners to central banks. But is it possible to use this period of red-hot inflation to make money? Is there a small group of people that have cracked the code and are still able to grow their war chest whilst the cost of living sees most people putting less food in their baskets? Imagine if it were possible. Imagine knowing the secret of how to keep growing your assets even with rampant inflation. If it were possible, these people would have found the yellow brick road to financial freedom. Well, ladies and gentlemen, it is possible. And I'm going to show you how. I'm currently in the process of making the single biggest investment of my entire life. But more on that later. Everything is getting more expensive to buy. The stuff isn't getting any better. Our cash is just getting worse. I stuck 50 quid in my car the other day and had to fill up again after nipping out to get a fresh loaf. With this in mind, here's the first important point you need to understand about getting rich in times of high inflation. Cash is not your friend. If you want to get rich when inflation is out of control, you need assets, not cash. And that underpins everything I want to tell you in this video. But the truth is, that's actually been the case for many, many years, not just now with this current high inflation problem. Interest rates have been low ever since the 2008 crash, and even though they are creeping up now, let's not forget they are still miles away from where they have been. Can you imagine a time when you'd get 17% interest for leaving your money in the bank? No, me neither, but we have been there. And before you think those times were golden, just think about your mortgage payment. So I've been holding the bare minimum in cash and acquiring assets now for many years. And the only thing that's changing with this current high inflation problem is I'm being more aggressive than ever. It simply confirms to me what I've known for many years. And right now, I want more assets more quickly than ever before. Ironically, however, there is one barrier standing in the way between me and acquiring the assets that I need for financial freedom. Cash might not be my friend, but I need more of it. You see, although cash is no good as a long-term store of value, you need it in the first place to buy the assets to replace it. So cash flow is hugely important. Without it, none of this is possible. So here's the first thing I will be doing, and I recommend you do the same. I'm going to be doing everything in my power to increase my income. I'm a big believer in only worrying about things that I can control. I can't control inflation or what the stock market is up to, so I choose to simply not worry about it. How can I increase my income? Well, there's two things that I can do: improve my skills and work smarter. Whether that's to increase my marketing skills to attract more clients as a financial advisor, or up my editing game to make these YouTube videos better. Simply find ways to get better at what I do. And work smarter. Notice I'm not saying work harder. Look, I can hustle and graft with the best of them, and goodness knows I've done that over the years, but one thing I have learned is it is much better to work smart than it is to work hard. Find efficiencies and better ways of working so I can achieve more in the same amount of time. This will get me more cash to buy more assets. But what kind of assets am I buying? Remember, this is what I'm doing, and it certainly isn't financial advice. Well, there's plenty to choose from. Fixed interest securities like bonds, gold and precious metals, stocks, currencies, even crypto, property, or what about collectibles like watches or Pokemon cards? Well, let's start with bonds. I own a very small amount of bonds, and that's only really because they form part of a few funds that I have. But in terms of my overall portfolio, it is almost none. And I don't intend on changing that. Although with bonds it's true to say that your money is pretty safe and accessible, with rising inflation, the fixed rate of return you're getting is being eroded. And the only thing that I'm interested in is real return. Real return is the rate of return on any investment adjusted to take into account inflation. It's really simple. All you have to do is take the investment return and deduct the rate of inflation. So for example, if your investment grew by 5% but inflation was 3%, your real return is only 2%. But let's say a 10-year UK government bond currently yields 2.5%. With the latest inflation figures around 9%, that's a real rate of return of negative 6.5%. Ouch. What about gold and other precious metals, always seen as a safe haven for people to flock to in times of uncertainty? Its finite supply certainly makes it one better than cash, which can be printed at the whim of central banks. I've never been one for investing in gold particularly, or any other precious metal for that matter, although it does form a small part of my overall portfolio, but that's only really there for diversification purposes. The main reason it's not a bigger part of my portfolio is it's not a world I follow that closely or take that much interest in. I prefer to invest in things I understand a little bit more, that I would describe as more productive assets. Gold doesn't do or produce anything. It just sits there looking shiny, which is fine because there's plenty of research that shows humans love shiny things. It just doesn't do much for me. Let's get more into my world. Here's what I'm interested in. Stocks. The world I know and love. But there's a problem. The stock market is in turmoil. 2022 has been a rotten year for most indexes as they wrestle with the uncertainty caused by inflation, interest rates, and political conflict. When the world is on fire like this, a question I am often asked is, Tom, with everything going on, are you still investing? And the answer is yes, lots. Exactly as I was before high inflation was in every single headline, and more if I can afford to. And that's not me being a buy the dip fanatic, although it is true to say that markets are now at a discount from where they were this time last year. They are on sale, and that could be good for anybody buying in right now, but the challenge is, how much further could they go on sale? Buy one, get one free could easily become buy one, get four free if markets keep on falling. I have no idea what markets are going to do in the short term, so I continue to invest regardless, every single month without fail, because I'm betting on the long-term prospects of business and economies in general. I'm looking well beyond the noise of the next 12 to 24 months because it's simply not relevant to me. I will invest this money through pension contributions to benefit from tax relief, another great way to kickstart my returns, and by making sure I keep filling up my stocks and shares ISA. I just want to keep buying assets, therefore I want more stocks. But what kind of businesses might fare well in times of high inflation? Ideally, when inflation is high, you want to buy businesses that have the ability to raise their prices without affecting demand. This is called pricing power. Think about the brand loyalty Apple has, for example. If they stuck another £100 on the cost of the latest iPhone, people would still be queuing outside in the rain to buy one. Also, consider brands that appeal to the wealthy, as they still have plenty of cash to spend. Think Louis Vuitton, Lamborghini. But the other end can also benefit consumer staples, stuff that has to be bought regardless. Think toilet roll. Now, this is not an investing tip to rush out and buy stocks in luxury cars or Andrex. I'm just giving you some general ideas. Also, any established businesses that have already spent the money they need to get going, and it wouldn't take a lot more cash pumped in to increase output if the demand was there. For example, if more people want to buy Coca-Cola, they don't need to spend loads more cash upgrading their infrastructure to do it. What about currencies? This is a whole nother market entirely, and despite what the YouTube algorithm thinks, I do not want to take a Greg Secker currency trading course anytime soon. Again, this is simply not my world, and going back to my mantra of leaning into things that I understand, this is not something that I'll be doing. But we can't talk about currencies without discussing the basket case of all investment options that is cryptocurrency. If you think it's been bad for the stock market, take a look at cryptocurrency. Magic internet money has fallen over faster than the babysitter's boyfriend when the car pulls up. Have I got some? Yes. Does it currently look ugly? Very. But am I buying more? No. Its potentially finite supply certainly makes it interesting and gives it some similarities to gold in that respect, but I still struggle with the massive volatility in this space. Call me a wimp, but I don't like an asset that rises and falls for no true economic reason whatsoever and instead just because someone tweeted. In truth, I'm already overexposed in this area. I've already got more than I would like, and I will not be adding to it. I won't be buying Rolexes or Charizard cards either because I simply don't know anything about this world and I haven't got time to learn. Enough about what I'm not buying. Let's talk about what I am. I'm currently making the biggest single investment of my entire life. Here it is. I'm investing in another property, but not as a buy-to-let. Instead, I am going to run it as a holiday let. Long weekends and week-long stays by the seaside, and a place for me and my family to retreat to also. This, I hope, is just the start of a holiday let business to provide me with another income stream and, most importantly, more assets. The purchase is all agreed and we're going through legals right now. As far as capital goes, it's the single biggest investment I've ever made in my life, by quite some way, but it will give me two things: income from the holiday rent and the capital appreciation in value of the property over time. But interestingly, I'm going into a lot of debt to do this. Here's why. In the same way inflation eats away at your cash savings, it also eats away at debt. The real value of the debt decreases in the same way, so I am using leverage to my advantage, borrowing the most I can squeeze out of the grubby mitts of the bank in order to secure this holiday let, and then I'll use the rent to service the debt. And this borrowing will be on a fixed interest rate too that is already agreed, so I am not worried about the short-term rises in interest rates either. There's probably a whole video series to do on this new holiday let, which I will do when I get the keys. We can look at the legal structure I've set up to buy it, we can look at all the figures, why holiday let instead of buy to let, for example. It's going to take a load of cash to get this up and running initially, and I don't see me making any money in the early years, but over a long-term play, I see it working out quite nicely. This will be my tester. Once I've got it up and running smoothly, I plan on buying some more, and this is another reason why I've leveraged my money by taking out debt, so I can spread my money into potential future purchases instead of piling it all in on this one property. I don't see this inflation problem going away anytime soon. Will inflation keep firing at 10+% for the next 2 years? I think not, but I don't see us getting back to the Bank of England target of 2% in the next few years either. We might need to get used to an inflation rate of 5% or more for a while. And if that's the case, just remember, you need assets, not cash. Try not to get bogged down in things that you can't control. Just make sure you're making the best financial decisions that you possibly can, because that is in your control. Right, the word sex won't Google itself, you know. Only 300,000 more to go.